time. His name is Mark Kahn. He's a loan officer with Community Access Lending, and he's going to get us updated on what's happening in the mortgage world. It's been actually, is this the first time we've had a mortgage person, Ruth?
Well, we've had Sheila, the lending lady.
That's right, Sheila. How can I forget Sheila, the lending lady? I apologize, Sheila. Please forgive me. Yes, but it's been a while since we actually had Sheila on, and so the landscape's obviously changed the last few months here with rates fluctuating up and down, the 10-year Treasury hitting, once again probably lows for the year or so. But before we get to Mark, Ruth, what is happening in the real estate market?
Well, I've been looking back at the past couple of months, and there's not a lot of change. We have 25 days of inventory. That's the key factor everybody wants to know. And also the median price home jumped up to $405,000 the past 2 months. It was at $398,000, and I think it's going to really go back down there. I think it's going to dip a little bit. So we have 3,263 single family homes available. And what I always tell everybody, it's churning, which is good. Yesterday, we listed 27 homes under 400,000, and we closed 127. So that's kind of what's keeping the inventory at, I think it's okay at 25 days. I'm fine with that. We have 984 active homes under 400,000, and we're doing about 124 sales a day, which is right in line with the year-to-date figures of 139 sales a day. And by the end of August, it'll get up there too. So we'll be around 140 sales per day for August. And the astounding thing in our market right now is that the $1 million homes are jumping off the shelf. We're doing 4.5 sales a day, when last year we did 1.6 a day. So that's, big jump in the $1 million homes. And I know everybody knows we have 130 people that move to Las Vegas every day, and 45% of them come from California. And we know that the median priced home in the major metropolitan areas in California is $500 per square foot. So, if you have a 2,000 square foot home, it's $1 million. If you sell it and you come here, you can buy that same square footage for $400,000. So, and your mortgage payment would only be $1,517 principal and interest, or $1,846 for your monthly payment. And of course, the rentals are flying off the market. We have had more in our property management company that we have, Las Vegas Realty. We have had more lease renewals this year than ever before. People are staying put because there's no rentals available. And it's kind of self-perpetuating itself because everybody's staying, so nobody's moving. And so that market is pretty solid. Rents are going up. They went up 7% this year. NAR, the National Association of Realtors, say they're going to go up 4% next year. So the interesting factor there that affects Las Vegas is we have 31% of the sales are to non-owner occupieds. We're selling 43 homes a day to investors. That's 30% of our market. And some of them are the big guys. I'm in the process of doing research on who the big guys are. There's a company out of Utah that just closed 160 homes. Wow. So they're pulling their money, creating a corporation or an LLC, and they're coming down here and buying homes for cash. So that's what's happening. It's a different landscape than we've ever seen before. And I'm sure everybody knows this is because of the pandemic. Max? Can't hear you, Max.
Yeah, no, I was sorry about that.
Okay.
No, I mean, the people selling the $1 million homes, I was going to comment on California. I mean, they're not buying $400,000 homes. That's why the $1 million homes here in Vegas are going. They're taking their $500,000 in equity here and plopping down on a $1.3 million home and basically paying the same amount or less than what they were paying in California. And you minus out the taxes, the real estate taxes that are a little bit higher in California as well. And, net positive.
Yes.
especially, I mean, income makers anybody that makes over 400,000, 500,000 California basically gets a free house here in Vegas because of the taxes that they save just by moving across the states allows them to buy a home pretty much, with the tax savings.
Yeah, so absolutely.
Didn't you tell us like last week though, there was the days on inventory was 27. So did it go down? So
yes, it went down.
The market tightened up a little bit this last week.
Well, a month ago was 23 days, and then it went up to 27. Now it's down to 25, and I attribute the couple days jump is because of it's summertime. Mm-hmm. People are getting ready for school. People are going on vacations. Right. So I think that that stopped the buying cycle as hot as it was, but it's back. I can see this is going to maintain itself at least through the end of the year. Yeah, and of course, I believe into 2022. So we'll see.
Yeah, we'll see. Yeah. All right.
Max, Mark, I'm going to lower you into our lobby and going to hide you, and I'm going to hide our stats here. And what we're going to talk a little bit about is what's going on, what's happening in Las Vegas. And the big story and I think I'm going to have to hide you, Max. So I'll see you in a couple minutes. Let me get myself together here. This takes a minute. All right. So what's happening is the Raiders Stadium. And tonight is the first game, and we're playing the Seahawks. And if anybody's going to the game, there's 65,000 seat facility for tonight, 6 p.m., the Raiders preseason opener. And it's the fourth largest event at the stadium. And many of the people that are coming are going to be at the stadium for the first time. So a couple tips here. Traffic. Make sure you plan ahead to ensure that you arrive on time. And there's several ways you can get there. Polaris Avenue is northbound traffic only. Dean Martin Drive is southbound only on the event days. And that's to expedite the entrance and exit of the cars. There's 35,000 parking places within a mile of the stadium. So make sure that you know the location of the lot that you're going to go to. And I'll tell you what, the Allegiant Stadium has a fantastic website. So I put the information here on the screen. If you go to that website, allegiantstadium.com/plan your visit, it'll give you everything that you need to know. And it's really thorough and it's user friendly. If you're doing ride hailing with Lyft or Uber, be sure to note your preferred drop-off sites. The stadium's main rideshare lot moved from its initial location and is now located on Dean Martin Drive, just north of Hacienda Avenue. Now, riders can get dropped off at the Luxor or Mandalay Bay and walk to the stadium over the Hacienda Bridge, which is closed to vehicle traffic on game days. So they're getting this traffic down pat because it was a big problem, in July. The taxi and drop off, if you're arriving to the stadium by a taxi or being dropped off by a friend or family member, asked to do so at Diablo and Procyon, and be accessible from the Valley View Boulevard. The designated area has a gated walking path to the stadium, and again, only open on event days. If you're going to the Hacienda Bridge from Las Vegas Strip, you won't be alone because more than 20,000 concert goers were said to have used it on the July 10th Garth Brooks show. The officials added more shade tents and water areas near the bridge to ensure safety of all the attendees and all the employees. Las Vegas knows how to handle things. So if you're driving to the game, if you're driving yourself to the game isn't appealing, you can go to the Regional Transportation Commission, and it has a game day express bus service, $2 each way. You can't beat that. I mean, for all the hassle you eliminate. And there's 5 locations that you can catch these buses: Green Valley Ranch, the M Resort, Santa Fe Station, Red Rock Resort, and Boulder Station. And these services begin 30 minutes prior to the gates opening. And so the service runs every 30 minutes. Buses depart the stadium 20 to 30 minutes after the game ends. The pickup drop-off area is gate 10 at the stadium, located just off of Dean Martin Drive. Now, if you're tailgating will be in full effect at the Allegiant Stadium. And there's about 2,700 parking spaces surrounding the facility that allow tailgating. And one of the things about the tailgating is it does help to eliminate some of the traffic because, as you know, people go early and then they cook, they have fun, and that's probably going to account for maybe 5 to 7% of the people. Yeah. Yeah. So, they'll probably increase those. Lots open 4 hours ahead of kickoff, meaning 2 p.m. Wow. And that's for Saturday's game, with only fans who purchase parking passes are able to tailgate. So these are details that you need to know so that you have an awesome experience. And if you want to eat at the stadium, we've got the barbecue Mexican, and I'm showing you on the screen where they're located: the Rolling Smoke Barbecue, Capriati's, Pizza Rock, Twitch Lounge, Modelo Cantina. They must have beer there. Evil Pies, Ferraro's, and Fuku Burger. So I had to be careful how I said that one. And then what's not allowed. This is really important, everybody. Because you don't want to be turned away, or you don't want to have to put something that you paid money for in a trash can. I did that when I went to the hockey game for the first time. I had to throw away some things. So large bags, weapons, projectiles, food and beverages from the outside, strollers, laptops, sticks, drones, any commercial audio devices, non-service dogs, and noisemaker fireworks are also prohibited. Now, clear fanny bags, fanny packs, gallon freezer bags, and clutches not larger than 4x4 and 6x5 are permitted. So that's good to know. And there are multiple bag check areas located across the street from the stadium if you need to check a bag larger than what we put on here. So really important things to know so you have a fun time. And then things to see. Now, there's a Coors Light landing area, and it surrounds the Al Davis Memorial Torch, and it's a must-see. However, if the temperatures are over 100 degrees, don't expect those doors to be open tonight. So I didn't look at the temperature, so I'm not sure if it's going to be over 100 degrees tonight, but it's really a nice thing to see when you go the next time and it's not 100 degrees. And the Wall of Fame, now that's located on the 200 concourse. And the Raiders Wall of Fame features each member enshrined in the Pro Football Hall of Fame. And these areas serve as a great picture spot. So if you're into social media, who isn't? Instead of taking a picture, do a video. Pictures are passé. And another must-see feature, if you want the nightclub experience at the game, wow, an 11,000 square foot Wynn Field Club, you might know Wynn would do it, right, is the way to go. Located in the north end zone, fans can get VIP admission to the space for only $150 on top of the price of the game ticket. Or if going big is in your playbook, table reservations with bottle service is available starting at $3,000 minimum spend. Holy mackerel. And I have to thank Mark Akers, of course, give him credit, Las Vegas Review-Journal, for giving me all this wonderful information. So I am going to segue back here and bring you back on, and we'll bring Mark back on. And so that was a lot of information in a short period of time, but do go to that website because you want this experience to be awesome. And go Raiders tonight. Beat those Seahawks.
I can add something about stadium access. Don't forget there's that tram that goes between Vidara, the park, Excalibur, and Mandalay for a little cheat. So when you get out of there, you're not stuck in the traffic.
Good point, Mark. Thank you.
That's how I normally go when I do like hockey games and now for the Raider Stadium.
And where do you park, Mark?
You can park at Vidara Valet for free, and if too many people do it, obviously. But either Vidara, the park, or Excalibur, each one's got that free tram.
Fantastic.
And it goes right to Mandalay, and then you just go over that Hacienda thing.
You said Red Rock has a bus service, right?
Yes.
That's great. I mean, for everybody living on the west side of town, they can just use the bus service to get back and forth.
It's going to take them a couple games, I think, to get that traffic a little more straightened out. So don't get too disconcerted if tonight's a mess.
What they say they had the Garth Brooks 100,000 people.
Well,
at the Garth Brooks concert.
And you know what? These events are selling out. The UFC 264 sold out in seconds. And the Life is Beautiful, Daisy Carnival music, that was a matter of hours. The soccer championship, that was sold out in 90 minutes. And of course, the Allegiant's been sold out. So for its first show ever in Nevada.
Yeah.
And they're giving you warnings on the 15 freeway, like even a couple days ahead, like plan accordingly, you know, stadium event on this day. So that's kind of nice as well.
Yeah. You know, the return of all these prominent events is so important to the recovery of our tourism industry and our economy as a whole. And we have such a diverse calendar of events. It's already driving the visitation and related spending on hotels and meals and transportation. And that directly supports 1 in 4 jobs in Southern Nevada. And Las Vegas is ready and willing to welcome all these thousands more concert goers and sports fans in all the months ahead, as long as they can get a ticket.
Yeah. So good stuff. A lot of things happen in Vegas. I'm excited about it.
Oh, me too.
All right. So let's get to our guest today, Mr.
Awesome.
Mark Kahn from Community Access Lending, and he's going to share with us what's happening in the mortgage and lending world here. But I always like to start off the show with our new guests with the same question, which is, are you a Las Vegas native? I know you're in Louisiana right now. We're going to touch on that right now.
No, I'm from the Bay Area. Came from Northern California, Marin County.
Okay.
So, you know, everything that's kind of going on with this boom in our jumbo and super jumbo world, I've been around it, you know, my whole life out there. You know, I remember coming to Vegas and seeing the billboards, a home for $99,000. And it's like, holy cow, that's less than a down payment, you know, coming from California. So it's changed immensely. And I can't believe how many $3, $4, $5 million homes are pending right now. I mean, it's incredible what's happening with that market. I mean, we have like 3 different markets now in Vegas with that super jumbo. Then you have the FHA, which is just really getting priced out of the market. With, as Ruth was saying, the average home price, you know, inching toward $400K. And, you know, the biggest we can go on FHA is $350 and change. But VA has really, really been a strong component in Las Vegas. We have, you know, obviously Nellis and a ton of vets who come and retire out there. And something that VA just came back out with is 100% cash out.
Oh, really?
Which is really nice. So, you know, we had it years ago, and then they took it away. And I think it's a sign that the market's strong. And they're really not penalizing that much to go to 100, which is nice. Another very popular thing right now is PMI removal. You know, if you bought something in the last year and a half, you've maintained some incredible equity. And we're, you know, trying to remove that for everybody you can. But I'd say the one kind of issue going on in Vegas and all over the country is appraisals right now. You know, it's a challenge to get the speed and the price kind of to match what we've been used to. And that's been, you know, on our end, something that we've been trying to accommodate just so the borrowers don't have to be penalized, you know, for a 3-week turn time or for something that's going to cost 3 times what it should.
And when you say like the price, is it just not coming in as high as what
nothing was value related. Yeah, so we're never
okay.
really concerned about value. Speed is what our challenge is, because our realtors are trying to, you know, write contracts. You know, we could close loans in a short period of time, but let's say if we have a 2-3 week appraisal contingency, because that's what these guys are quoting, it almost makes an offer hard to compete. So, you know, we're doing everything we can. $475 used to be the going rate, $100 rush on top of that, you know, to get it quicker. We're seeing stuff, you know, $800,000-$900,000 quotes coming out, you know, just to get it back to us. But in the greater scheme of things, what's going to be what's the better use of the money on a longer lock extension, possibly not getting that house, or, you know, paying a little more, getting that appraisal in, and then moving on and moving forward. And the one stat that I found that was like eye-opening is there's 20 more appraisal management companies in Vegas than there are appraisers. So I believe the stat's like 470 AMCs and 450 appraisers. So you can imagine how many different companies are trying to get these guys to work for them. And that's what we're feeling it.
Oh, wow. Wow.
But the VA, totally separate animal. VA has a guarantee, can't charge more than 600, 10 days or less, and then you move on. It's a kind of different setup with these AMCs. I think moving forward in the future, Fannie and Freddie have probably lent on every street in the nation. So they're accumulating data, and it makes it easier for them to do the waivers and all that. Like, we were getting them a lot over the COVID period. They've kind of calmed down because of the price acceleration. They're not trying, you could see, with the history, the house sold for $650 6 months ago, now it's selling for $750. You're not going to get a waiver on that, but it might be worth that. So you get the real appraisal.
Right. Okay. So you're saying like the waivers happened last year, meaning that they didn't require an appraisal for
correct.
The
just, the automated underwriting system will decide if they're going to take the waiver or not. And you have DU for Fannie Mae, and you have LP for Freddie Mac. And you might get them on both. You might get it on one. And it's a definite benefit for everybody, because it just, you could get a loan done in 2 weeks or less if you have no appraisal.
Mm-hmm. Let's talk about the jumbo products, since that's a big topic here in Vegas with these loan amounts. Now, so I remember back in the day, jumbo products, it took extra documentation, extra time.
It's gotten better.
Has it gotten better? So I mean, what are the jumbo limits right now? And
in Vegas, 548, 250 is our conforming loan limit. So anything over that is going to be considered jumbo. We can lend up to $3 million, no PMI, to 90% right now.
Wow, with no PMI.
No PMI. So there's an add to the pricing,
sure.
So it doesn't just disappear. You're going to get better pricing if you go 15 down or 20 down. But piece of cake. I mean, we can close those 2 weeks or less. When you get above a $3 million loan amount, you lose a lot of the wholesale guys, and there's still some remaining, but then wholesale, I feel, becomes a little uncompetitive. And then it's back to like the super credit unions, like a Penn Fed, who love those large loans, or even like a private banking, Chase, somebody like that. So 3 million and under for wholesale, we can do all day long. And the rates are amazing. I mean,
I was just going to ask about how are the rates?
I've been doing my jumbos between 2.75 and 3.5. Just depending on credit score, loan to value. It's 30-year fixed. Here's something that's interesting to me. The ARMs are coming back. Now, we haven't had ARMs in a while.
Yeah.
10, 7, 5. They're all coming back, and they're actually pretty incredibly priced. Like, if you could get, 1.75% money on a 7-year term, you're only going to be in town for 5 years. Why not pay down as much principal as you can?
No doubt.
And the 15-year loans right now are also at 1.75 as a low, which is lower than inflation that they're predicting.
Right. No, I think, what's the average homeowner stay in their home, Ruth? Like 5.7 years or something like that.
That's about 6 years, or 7 to 10.
Especially
10.
After the foreclosure bust here, we see people staying in their homes longer.
A little bit longer, right?
A little bit longer, yeah.
You know what I also see coming back a little bit? I mean, it's not huge in Vegas, but the high-rise sector. And when you were talking about the rentals and all that, like, I've been noticing a lot of action in all of the kind of forgotten high-rise properties in Vegas. They're coming back strong. Mandarin Oriental got converted to Waldorf. Those are just flying right now. Where I thought there was no action on those before.
So, Mark, do you think that's because they can get their payment lower, so they don't mind the high HOA payment? I think that might have a factor.
Yeah, that HOA never goes away. But if you're utilizing all those amenities, I live in a high rise in Vegas, so I enjoy it. But I've noticed, the action and the trading has really can't come back, where we were just floundering for a little bit while the whole valley was booming. And now I think this, like, what about these things? We're right next to the strip.
Yes.
So, and as the strip comes back, the renters who want to, live near the strip will come back too. But I think that market suffered a little bit when the casinos were closed, the nightlife was closed, and a lot of people in that industry make great money, and they weren't making it to live next to work that wasn't a work.
Right.
What else was I gonna remind you guys about VA. Is there any specific, Ruth, program that you see interest in? Like one that I see that's kind of falling behind is the down payment assistance.
Right.
It's
exactly.
just so hard to compete with a cash offer, and and especially those are the ones being snapped up, I feel, by the hedge fund, just cash to rent. So I think that sector maybe needs a little more of a chance.
Well, the interesting thing, the interesting thing is, because I've been doing I have a research project, and it is about the people who are buying rentals here. And last week on my show, I showed everybody this. You mentioned hedge funds, and I just want to clarify that, because the hedge funds are buying the casinos. Mark, I didn't know if you knew that. They're buying the real estate for the casinos, and then they're leasing the casinos back to the, to the operators and what have you. So you don't see the big guys, the really big guys, buying up homes. They bought them back when we had the foreclosure experience. And so now they're buying properties where they're getting a huge return. But we do see the LLCs forming, like the one I was speaking about out of Utah. They just bought 160 homes in the past 2 months. They got a group of investors together, and they're coming down here and buying homes between $300,000 and $400,000.
So Mark, how's the market in Louisiana? And Mark's in his Louisiana home right now. So how's the market in that?
Super strong. It's a very consistent acceleration out here. We had Katrina way back when. So post Katrina, you had a huge bump up, and then from there, it's more of a steady normal appreciation. Where Vegas sometimes has these double-digit months and all that. But we have, we're an older city. We have very distinct neighborhoods. And certain neighborhoods, you'll have a house come up, and it's gone in hours. Wow. We have a lot fewer homes with pools, so to say, out here. You could do a search in Vegas, 3-4 bedrooms with pools, and you're in the hundreds. We may have 80, 90 out here, and 70 are pending. Wow. The market is interesting. What we also out here, a lot of people prefer 10-year fix and 15-year fix, paying off the property because they're in it longer, kind of family passes it down. Okay. And where in Vegas, I have hundreds of different mortgage competitors, with banker options, broker options, local banks. We have more of like a savings and loan atmosphere here, where someone in their family had banked with them for 20, 30 years. And, they walk in, it's still like almost of a handshake. So my products out here are kind of outstanding, where in Vegas, I'm one of many, but I always try to be the lowest price, lowest, fees that I can.
How is the rate and pricing different by region like that? Have you noticed,
It is. Like I'll give you an example. California is so competitive, huger loan amounts, and you're going to have loan officers who are on a smaller comp plan. The way that the loan officers get paid is one of two ways, either by the bank or by the borrower. Mm-hmm. So if you have a $3 million loan and, someone's trying to make a similar commission to a realtor, they're not going to be able to sell a competitive rate. Sure. So, you have a lot smaller comp plan. It makes it fair. You can have what's kind of called a max comp, meaning that you can't make more than a certain amount. Anything above that goes back to the borrower. So you have to find your sweet spot, based on your competition and what the market is dictating. But you do see a lot of difference. I can beat people by 3/4 to a point on their rate.
Wow.
Yeah. And that's why there's always going to be refinances, in my opinion, when you have that type of top and bottom and in the same market. But, the one thing that none of us can control is that value game. I've been doing loans since 2002. So I lived it in Vegas, the boom, the bust, the comeback. And I think we're all better prepared for it now, so I don't see it happening like that again, but it could settle. It's not things don't go up forever sometimes. And you have to be comfortable with instead of worrying about what that home may be worth 3 years from now, what my debt service on that home is. Can I afford it? Does it work for me? And you do it that way.
Yeah.
And that word, have you heard of it? What's called a debt service coverage ratio?
No.
So remember back when we had stated income?
Yes.
All right. So
I love
we have a new fancy
Everybody loved
one
them
now, just for investment. It's called DSCR. And basically what that does is, instead of the property qualifying on your normal debt ratio of all your bills and your payments, it qualifies on the rent that property is bringing in versus the payment. And you're seeing a lot of lenders come out with this now, going up to 85% loan to value, up to 3 million loan amounts.
Wow.
And it's a way for someone with, who's been doing well these past couple of years, got some equity in their house. They may pull it out, and they can, if they want to be a little creative, that loan is getting people more homes, and that's about a mid 4% rate.
Wow. So what if, like, here in Vegas, like, I mean, sometimes the rents right now with it rising, you can cover more than your mortgage right now for the most part, right? Like for $400,000 homes, 2,000 square feet here in Vegas. I mean, Ruth, you tell me. I think rentals are going
it's
up to
18. Yeah, it's $1,800
to $2,000.
Well, what I'm saying is the mortgage payment with 10% down is $1,800 taxes and insurance, and the rent's about $2,100.
Exactly
yeah,
right.
So if somebody had 15% down payment money, they could buy 3-4 of those and qualify on each one, no problem, and it pencils out and cash flows. And
so they don't have to worry about their own personal income. It's basically the income generated from the rent.
Yep, like your credit score is obviously starting it.
Sure.
The property, what it produces, and there's an appraisal. You can't just say, hey, it's going to rent for this. We have what's called a schedule of rents, and the appraiser will determine what the fair market value of rent, amongst what's been on the MLS and such, and that's what we use. Because a lot of times people will be able to rent more than that, but that's how it qualifies on.
Okay.
And it's nice because it also enables you not to have that property rented at that moment, because that's also a little something tough too. Like, I got to buy a house and have a renter at that same time.
Mm-hmm. Yeah, that's interesting. And cash out refis, right? Just 6 months ago. I mean, it took a long time to do any type of cash out. Is that still the case now during this period of time?
Lender specific,
right?
Really lender specific. How much volume? I was finding when the pandemic started, you had a lot of these lenders had loans on their line, like they couldn't sell them fast enough to kind of re-lend that money. Mm-hmm. And that's a good advantage that we have in the wholesale world, because we never get jammed up like that. Where you could pick one of 80 different spots, let's say, as long as your company's approved with them. Whereas, let's say a banker model has one warehouse line, and if everybody in that office is hot and on fire at the same time, that line gets lent out.
Oh, crazy.
And that's when you see, and then you'll see sometimes people will raise rates to calm the volume, or they just say, hey, we got a 45-day turn time, which is, maybe what you've experienced. But we like to get our stuff done 2 weeks or less, 3 weeks or less. And that's what I just, but even purchase it. That's why I try to, promote that versus a cash offer. Because in the end, the money's the same. Exactly, if someone's getting $1 million, whether it's lent, borrowed money or green cash money, it's the same. And you just have to, as I like to tell Ruth, just communication is key. Teamwork is key in lending, and then you'll get to that final closing stage. But that's, you've always got to talk and be, just be transparent to everybody in the transaction. On a refi, it's simple. It's you and the borrower. On a purchase, it's not just you and the borrower. There's a buying agent and, and there's a selling side. And sometimes there's going to be another transaction down the road. So it's essential everyone just works together,
Well,
virtual hand-holding.
Yeah, you were amazing. We got an offer on John's $1.3 million listing on a Friday. You did the appraisal Tuesday. We had loan approval within days, within a week, I believe. We had everything done. But the big thing, the big point is, it was Friday, July 2nd. You talked to John and I every day, including Sunday and July the 4th, you know,
Yeah, I
and
remember.
yeah, and July the 5th, which was the actual holiday. And we got the deal closed in
Wow.
21 days.
Fantastic.
And it was a VA all cash.
VA loan.
Yes, it was amazing. And
Yeah, everyone was super happy. You know, I remember my borrower. You know, he came out of the military. They moved to Vegas, and you know they were having trouble finding a home they liked. So this was so important that we did it. We did it under the time constraints because these things are getting snapped up.
yes. Yeah, we were on the market one day.
Yeah. Yeah. And, you know, but I don't remember. I think we might have missed out on 3 or 4 prior to that, you know, that we couldn't get accepted.
Yeah.
And that's where I think the key is, you know, if you got to meet your time frame. You know, you can't just say, hey, I'm going to do it in 3 days. But,
and I think a lot of the sellers, agents, and they don't understand the new VA guidelines and how quickly VA loans can get done. And I think that's the message that we need to get out to all the sellers agents. You know, don't shy away from those VA loans. And it's not fair.
No, here's something that I remember too. So what's a great thing, I just love the VA process. So I'm a little jaded, but my favorite part is when you're doing a purchase. This doesn't happen on a refinance. When you're doing a purchase, let's say we have a purchase price of $1.3 million, and you send that appraiser out there. If there's an issue with that value, we're going to hear from that appraiser within 48 hours, and it's called Tidewater. And we then know we got a supply. We got one chance. We got comps, you know, and I always try to speak to my listing agents and ask, how comfortable are you with this price? You know, I pull my own comps too, and I can tell if something's going to be, you know, a Hail Mary or not. But if you don't get that Tidewater, you're pretty confident that appraisal is going to come in and you can work on the rest of the file and keep it going. Whereas on every other loan type, it's a dart throw. You know, you get what you get. There's no communication with that appraiser, and you can do a rebuttal, but obviously anything after the fact is just going to delay. So that's another great strong asset of a VA loan, where you know you could pretty much decide it's going to happen or not in that first week.
Well, this was a Tidewater situation because this community only had 10 homes in it, and nothing had sold for that price per square foot. I mean, people in that community were mostly retired, and I think there was only like 2 sales in a year out of the 10 homes, and they certainly weren't the price per square foot that this home was. They didn't have the amenities, whatever, but still the appraiser reached out to us and said, send me your comps. And of course, we had already done the comps before we listed the house, you know, like a good seller's agent would. So we knew, you know, that it could support the price. And the appraiser was amazing, how she worked with us so diligently.
Yeah, no, and that's like the whole back to the communication and teamwork, and it's like everybody has a part in the loans transaction, and that actually kind of makes it fun to do. You know, you're helping people, you're working together, and then you get a positive result.
And Mark, we recently had an agent who we recommended you to the agent, and there was some last minute hurdles, and you were amazing in getting them accomplished. And I just want to shout out to agents. You know, sometimes if somebody doesn't call you back, it's because they're working hard to get the problem solved. And if they keep answering their phone, they can't solve the problem. So sometimes
it's nice as a lender. I like to update people at the end of the day, so everything's fresh. We've the day's over, right? You know, people do go home on the underwriting side. You know, like I could work all night long, but I need other people in the transaction. So for me, I like to update people kind of at the end of the day, where some other realtors want that 9 a.m, and you know nothing's really happened at 9 a.m. Well, let's
or on Sunday. Or on Sunday.
You know, and you know, you still want to speak and let people know what can and can't be done, but you know, just to manage your expectations, and that's why everybody will get to the finish line, or at least tell you that it's not going to happen.
Well, there was a deadline on this one. I think it was for Tuesday, and at the last minute, somebody found a glitch in the, and how did that occur? What was that? Because I think that's something that.
So all the lenders have third party like fraud alert searches. We always want to make sure you're not buying Mercedes, after you sign loan docs and taking out, $100,000 credit card on the side. But also sometimes they do address searches. So, we want to make sure you're not not hiding, but not disclosing a property you may own in a different entity, or have, it doesn't have a mortgage, but it has taxes and insurance I got to count. So sometimes that brings up a boo-boo from the past, we can call it. And some are workable and some aren't. This one was workable. We needed to pull documents, and because it was, I think three years ago was when the incident happened. So you can't just click and have it pull up. And extensions had to be made just so we can have like our contingency period safe. But once we get the final answer, then you just keep going through it.
Well, and
it's all about communicating.
And it's all about, I have to tell everybody, it's all about the experience of the lender. You knew the problem could be solved. So you didn't have a problem reaching out to the seller's agent to assure her, look, just give us an extension. We can solve the problem, but because of the situation, we just need a little more time. And you were instrumental in making that transaction happen.
Yeah, I just thought that was needed, because this was one that had it was a domino. Ours led to transaction 2, which led to transaction 3. So there was a lot of nerves on the line. So just to make sure everybody knew what was happening, and to give a real expectation. Someone may want it done by 2. I'll try, but it may take till 5. So you got to just be honest. But I think the longer you're in lending and you see how other people react to things, and when they react wrongly and you see something blow up, you're like, I never want to repeat that.
Right.
So I always joke, it's easy to sleep at night when you just kind of tell people how it is. And, we're all adults. So sometimes we can take, bad news. Sometimes you can't, but it's the truth. And, there's going to be the next deal. Let's say if something doesn't happen, in this case, I told, the borrower and I were just communicating greatly too. And if they didn't want to wait for us for this one day we needed, hey, there's other homes out there, and I'll have you perfectly clean and ready now that we had this hiccup and solved it, as opposed to, just bowing down to every crazy demand, because there's some crazy demands that get thrown out when the heat of the moment happens, and everyone just has to calm down a little bit and what's the greater good? We all want it to close,
Right.
So yeah, it was a fun one. But
thank you for all your hard work and for keeping everybody calm.
Now we're gonna get a couple easy ones. That's how the Murphy's Law works.
Yeah, so, the agent was fairly new, and I think it was a great learning experience for her. I think it was a learning experience for me, consoling her as the process went a little bit longer than it should have in her mind. We're
still gonna close this in the escrow period. That's the crazy thing. But we had a loan contingency, and no one wants to play games with earnest money. So in this one, we just had to make sure there's nothing that was gonna go left. And now we're past that. We're gonna finish this up, close on time. Everyone's gonna be happy.
Yeah.
And that's what I was trying to preach the entire time, that we're not, dead in the water here. We can lose 2-3 days in the middle, and I'll catch it up while I'm waiting for the CD period to count down.
Yeah.
So on the topic of challenges right now, though, you talked about the appraisal challenge, right? That with the time,
just getting them back in time,
right? Getting back in time. What are there maybe 1 or 2 other things that you're seeing right now in the process that are coming up, and then how can that be prevented, just to help agents and the borrowers who be seeing this to mitigate some of that?
The only answer I have is, and it sucks, we have to overpay for rushes. That's like the only way we're going to solve it right now, because there are some, I've worked for other companies. I've worked for Guaranteed Rate. I've worked for retail spots. I've had my own branch, but each company is approaching this different. I know for a fact Guaranteed Rate is getting their appraisals back in 4 days, but they're overpaying double. Are they passing it along? I'm not sure. Are they eating it on the company side? That's for them to decide. But it's creating a tiny bit of a monster, because then the next guy is going to try to pay 20 more or 50 more. And, it's these appraisers have a lot of power right now. And the appraisal management companies really don't, because the appraisal management companies are capped on what they can make. They can't make more than, I believe, 150. Normally they make 150 to 125 on that order. So if you're paying 1,500 for an appraisal, that the middleman still only gets his set fee, like he charged you 500. But that's what's happening, is all these AMCs are offering the same appraiser more for an order. Of course, they're going to take the higher priced fee. You
Sure.
can't blame them.
No doubt.
And so I think, and when we have blogs, we're actually having the mortgage conventions are coming back to Vegas. That's another event. So this next weekend, I'm back on Friday. We have one at Planet Hollywood. So I'm actually really curious. The appraisals is a major discussion that's going to be done there. All the appraisal management companies have booths, and that's a little better for us, because I can't call an appraiser and say, take this or take that. I have to use that appraisal management company. And what's hard for me is, if I'm in Vegas, I'm using a place in North Carolina. How do they know my market? I don't think they do.
Right.
They're taking everybody else's word. I really would prefer that it went back to state by state appraisal management companies versus these nationwide guys that are just trying to take anything and everything. So that would be my suggestion if anyone cared to listen to me. But
so any other prominent issues in the loan process right now, and on any of the products that you're running into?
No, I mean, it's really nice. You just got to keep reading. Always be aware of your guidelines. Most lenders will have scenario desks. If you're unsure, you can send all your documentation. I can actually get an answer. Let's say if I'm worried about income, someone has 10 K1s, from different companies, and they're writing things off. I could actually have a pre-underwriter make like a stamp of approval. So when I then submit it, 2 weeks when we get our offer in and accepted, I don't start from scratch again with a different set of eyes. That's something that can help. VA, let's say I could call it. VA's got an 800 number. You can call them anytime for questions. I had a question the other day with could I have a first time VA use on 100% cash out? I didn't know. Called, got my answer. We can. So it never be bashful as a lender to ask, or get a second opinion if you're just not sure, and then your experience will prevail, by doing that.
Fantastic. Just one last question. Personally curious about the investment kind of loan that you said that doesn't require the term you use, with debt service coverage.
Yeah, right? DSCR. It's like a commercial loan type of a approach, but that's, you want it to be, you want that rent to be over you need the rent to be over the mortgage payment. And that's the key to that product. You got to have an approved, a lot of guys like to do that in high rises. Got to make sure, here's something to add. If the condo is warrantable or non-warrantable, that does make a difference. There is a way to get a non-warrantable. There is a way to get something that is non-warrantable to a warrantable. We can do a limited condo review. The key is having no litigation. That's that litigation's a killer. Right. You got to make sure that you don't have a building that's all bought by investors, renters. It's a small questionnaire. No condo tell, different loan for that one. But we have them in Vegas. We don't have them out here in New Orleans.
And can you have co-borrowers that are unrelated? Like, say for instance.
Yeah. So basically, that you do that with two apps.
Okay.
Like if you're not married or family, so you'd have you are borrower and co-borrower, but I actually have two different 1003s that you kind of combine.
And that's 15% down.
That's the lowest. You're getting the highest rate with 15% down of that product, but you can do it, and that does help a lot of people.
Yeah. So what's the typical investment down payment? Is it 20%? Is it 30% that gets?
I suggest, so let's go back to a normal loan, conventional. when you could actually go 85 on those, 15% down, but you're getting hammered with the hit. It just doesn't make sense. You're almost paying that extra 5% in fees to save it on down payment. It's not smart. Then at 80, the hit gets a little less. 75 and below is the same. So I always try to see if my borrowers can come in with 25%. And my suggestion, so everyone thinks investment loans are so high. Well, why are they high? If I got to add a 2.375 price hit, now let's say, what does that mean? For every 100 grand, that's $2,375. That would be the investment penalty. So I always try to sell my investment loans with discount points, so I can get your rate as close as possible to my primary guy. Because in the long run, I mean, we can do the amortization schedule. You know, it's night and day. If I take a 2.99 rate or if I take a 3.5 rate, and there's no way for me to get rid of that price hit except, put it right into the rate. So if everybody works together and we see the bigger picture, you're coming down with 25%. Why not pay an extra point and a half in fees, and I get your rate right where you're expecting it, and now you pencil out cash flow even better.
Yeah.
So that's what I like to do on the investments. I'm getting a lot of second homes. You got to make sure you can't live in Summerlin and get a second home in Henderson. People try.
Right.
Pahrum's been having some action. I've been getting calls from there. People, asking about second homes. It's just not far enough.
Yeah.
From Vegas, maybe Mount Charleston. But
so what's rates like and down payment like on second homes?
Same. Like 10% down. No, I have no hit. So a lot of lenders, they had a concentration issue where a lot of people were just doing investments in second homes and not primary. And you want to have like a balanced carry. You just don't want all as the secondary guy. So there was an extra fee that was put on for an investment, second home, and also they were doing a refi fee for a while, and all those have relaxed. Oh, wow. I love where rates are right now. I think rates are going to stay very similar. Like Ruth was saying, into 22. When you're watching that bond, though, it's really unfair. When it goes down 10 bips, we're only going to get a little bit of improvement. If God forbid it goes up 10 bips, I'm probably getting 3 worsenings. Never fair. It's like one I get one, I give away 2. So I hate the volatility. I just like it to be nice and steady.
And when speaking of volatility on rates, like what's the ideal time to lock rates?
I try to lock. I mean, if I look at my file, I try to lock everything 15. I don't need 30. For me to take 30 days on a loan, it's only appraisal based. So even on my jumbos, as long as I know I can get that, you disclose it, you order it, they kind of give you a quote on due date and all this. And as long as that pencils in with my underwriting, I just happen to be a little faster right now just because of who I'm using. Than maybe a normal team, but I can do a loan in 2 weeks. I mean, it's not a problem, but I like to ask for 3. And then, you try not to lock and lose 2 weekends in your period. There's some tricks and holidays and all that, but lock extensions aren't that hard. If the market's better, normally you can just double up that lock for a 0.1 cost. And we have ways that we can absorb it on our end. And, just as long as it goes back to that whole plan in the beginning. I have this talk with the borrower, and if I could save you a quarter, off of 400 grand, it's $1,000. Yeah. So like, why throw it away? But that's just, me trying to be as sharp as possible. Whereas I could be conservative and just say, okay, let's lock for 45. But I'd rather be sharper, and then it kind of makes me makes me close it faster. If I know I have 15 days or if I know I have 45, you're going to work a little harder faster when you got 15. So it kind of works. It works for everybody. But my behind the scenes team is fast. If they started to go 3-4 days to do stuff, then yes, I'd have to adjust my lock period. Mm-hmm. But right now, where I predominantly take my loans to United Wholesale Mortgage. That's absolutely my number one. I use SunWest Mortgage. I use AmWest. I use Caliber. I use HomePoint. Another thing that's coming back totally, which could be a whole nother talk, is the HELOCs in seconds. Coming back really strong. And that surprised me because I read how Wells Fargo canceled everybody's signature credit lines.
Right.
So you can't borrow with your name anymore, but they're feeling very confident attaching to these properties. And first lien HELOCs are coming back too, because a lot of people are owning these homes free and clear. So just to have a way to, hey, you need some money, you can borrow and for the first 10 years and pay it back and keep borrowing, and then you have a 20-year repay. But those are nice. That word piggyback, remember those?
Yes.
Those are back, so you could go, if you have a high enough credit score, I can go up to 95 with a great rate, like 399 on that HELOC.
Wow.
And that's a way to avoid mortgage insurance, right? You have that nice 70 or 80% first, and then you put that HELOC second, and then you focus on paying off that HELOC.
Fantastic.
Yeah, the products are out there. You just have to know how to use them and how to get them.
Yeah. Well, Mark, we're at the top of the hour here, and I want to thank you for all that information and for coming on the show. It sounds like when Ruth endorses somebody, her word spreads like wildfire. So it sounds like your stuff. Yeah. So
I'm ready. Yeah, I'd love to help people. So anybody who wants to call, I'll give you my 100%.
Yeah. So Ruth has all your contact information on the screen here. So if you want to reach out to Mark Kahn here, the number's on the screen, 702-929-8220. Exactly. So any last words for our audience here, Mark, from you?
Go Raiders.
Love that.
Yeah, thank you, Mark, for coming on.
You're welcome.
Ruth, what is happening this week in education?
Well, we have an agency class that we're teaching on Monday from 10 to 1 with Jimmy Daig. I'm his sidekick, and you get 3 CE credits. So everybody will be getting an email this weekend to sign up at bee.vegas, and it has the whole calendar of the CE events between now and the end of the year, because we do schedule everything way in advance so people can sign up. And October 1st, the rules change. No more 24 credit hours. It's 36. And some new topics that they're going to have to take as well. So anyway, lots of good things coming. We have no social media classes per se this week, just our Thursday review class from 1 to 3. And that's it for this week. And I hope everybody enjoyed today's show. Mark, one last question for you. That number's good, because I'm going to boost this out to New Orleans. So
it's good here.
Okay.
I have a New Orleans number too, but let's start. We can start with this one, and then we'll see. Maybe I'll advertise that one next time. Let's see what action we get.
Okay, sounds wonderful.
And anybody can text to that number as well.
Super.
All right, super. All right, Mark. Appreciate you coming back on.
Thanks for inviting me
on. And everybody else, have a great week and tune into Ruth on Monday morning at 9 a.m.
And you can find me at facebook.com/ruthierocks on Facebook and on YouTube, Ruthie Rocks. So see everybody. Have a wonderful weekend. Love you all.
All right. Later.